everyone, it's Michael Cadet here with the Cadet Mortgage team at Cross Country Mortgage, and the market is moving, rates are shifting, and the Fed is hinting at changes that could reshape affordability. So we're going to break it all down so you know how to win this month. So this is your August market update, helping you stay ready, stay sharp, and stay winning. Okay, so let's go ahead and take a quick look at where mortgage rates have been trading. So current rates right now, the 30-year fixed mortgage is currently trading at 6.52%. The 15-year fixed mortgage is at 5.90%. The jumbo mortgage is at 6.55%. An FHA mortgage is at 6.11%. And for a VA mortgage is at 6.32%. And the 10-year treasury is down to 4.26%, down pretty sharply after Jerome Powell's speech at Jackson Hole, Wyoming this past week. So why this matters, the mortgage rates are tied to the 10-year treasury. So when the yields fall, buyers do gain purchasing power, and that's exactly what's happening right now. Okay, so let's go ahead and take a quick tour around our local counties so you can see exactly where prices and inventory currently stands. I'm gonna go ahead and put the numbers on the screen, and you can go ahead and take a look. So the quick takeaway is that inventory is up a bit, and it's giving buyers a little bit of breathing room as of right now. But with the rates expected to ease up, pent up demand, it really could hit the market fast and tightening things right back up. So Jackson Hole and the Fed. So Jerome Powell described the labor market as in a curious balance with job growth slowing. Risk, I guess, may now favor easing policy. So the way the markets did react is that the 10-year treasury, like I mentioned, it fell. It fell a little bit, and the mortgage rates, which are tied to the 10-year treasury, fell along with it as well. So as mortgage rates dipped, and traders are just now pricing in about an 80 to 90% chance of a rate cut in September. So something to keep in mind. So what does this all mean? So for home buyers, affordability, it could be improving, and it could be improving pretty quickly over the next few months. But waiting too long, it does risk missing that little small window, because competition is going to start heating up as rates do start to come down. For homeowners, refinance opportunities, they are back on the horizon. So you will be seeing a lot of advertisements probably hitting your inbox and hitting your mailbox about now is the time to refinance. But right now, refinances are definitely back on the horizon. Now with the market overall, lower rates plus a pent-up demand, it really could stabilize or push prices a little bit higher. So that's just something just to keep in mind as we start navigating through these new waters. Now the national 30-year conventional mortgage is around 6.57%. FHA and VA loans are in the low sixes. Just 1 year ago, rates were in over about 7%. So what does this all mean? Right now is that with buyers, even a half a point drop translates into tens of thousands in added buying power. For homeowners, the opportunity really does rest in being able to refinance right now, open up home equity lines of credit, and even look to consolidate debt. Now, in terms of the market as a whole, I would expect multiple offers to start returning, especially in hot markets, because as affordability starts to improve, you're really going to start seeing a lot of people start coming off the fence and back into the market, trying to take their stab at home ownership. All right, so I want to go ahead and go over a recent win that we had this month. I recently had the honor of working with a lovely couple with a brand new baby, growing young family in the East Bay, and they were really just determined to get out of their rental property, and they wanted to buy their own home. And but the problem was that they had the savings, but the monthly payment was a real big stickler for them. They really needed to keep their monthly payment at a particular amount. And so we did explore all options, as we always do. We explored the down payment assistance programs, and after we went through the down payment assistance programs, we quickly just realized how it would negatively impact their long-term equity position, right? So the main thing that they really wanted was stability, right? No strings attached, just stability, wanted their monthly payment where they wanted it, and they had their budget in mind coming into this whole thing. So what we did, we structured their purchase using a 2-1 buy down. right? So this gives them a starting rate nearly 2% lower than current market rates, kept their, keeping their first couple years of payments very, very comfortable, for them while they adjust, to their whole new family life. Right, so they got to purchase their new home all with confidence, and with rates now coming down, it's actually a really, really great timing that they did all this, right? Because they're really perfectly positioned for a refinance. Because once they refinance, they can actually lock in a lot of long-term savings for themselves. Because in the event that you do a 2-1 buy down, the monies that you use to go ahead and subsidize your monthly payment, that actually goes into an escrow account that is used to subsidize your monthly payment every single month, right? So in the event that you do a refinance, you can take whatever funds that are remaining in that escrow account and use it towards, reducing your principal balance in the event of the refinance, buying down your interest rate, or just using it towards your closing costs. So really great timing and really great strategy to use at this time. So key takeaways is that, sometimes, the smartest move isn't always about minimizing cash up front, as we realized really quickly with this lovely family here. Really, sometimes it's just all about just protecting equity and just setting yourself up for future wins, right? So for this family, the 2-1 buy down strategy, it may have turned out to be the best long-term strategy versus just the immediate ease of not having to come up with so much cash, right? But the long-term strategy is really going to play out to their favor, and in a few years, they're really going to be, I bet you, really thanking themselves that they made this decision. So for this month's strategy, it's going to be the 2-1 buy down. This is going to be the strategy we're going to highlight for this month. It works so lovely for our family that we just talked about just a moment ago. Simply put, in year one, it's going to be 2% lower than whatever current market rates are. In year two, it's going to be 1% lower than whatever current market rates are. And then by year three, you're going to be right back at the note rate. But if rates drop before then, we're going to look to refinance you into something more permanent. I went ahead and dropped the link in the description that walks you step by step through how the 2-1 buy down works and how we use it strategically with clients, just like we just explained a moment ago. So go ahead and check it out after this video. All right, upcoming events and opportunities. The Fed is going to be meeting September 16th through the 17th. This is going to be a huge one because this may be the first rate cut of 2025. So trust me, we're all going to be hovering around that TV screen, hoping and praying for that rate cut. All right, so September 16th through the 17th, Fed is going to be meeting. This one may be the first rate cut of the year. Also, I have a homeowners workshop coming up. It's going to be in October. The date and the time and everything and all the links, that's going to be coming to you soon. But essentially, it's going to be about how to buy your home before you sell. And I'm going to be co-hosting it with one of my great realtor partners. So the registration link, that's going to be coming soon. I'll be sending that out as soon as we all have it all squared away. Okay, so here is the takeaway. So rates are easing, affordability is slightly improving, the local supply is giving some buyers some more opportunities, but the window may not stay open for too long. Okay, so if you're thinking about buying, refinancing, or just exploring your options, book a discovery call with me today. Let's map out your plan together. And as always, I'm helping you stay ready, stay sharp, and stay winning. See you next month.